A very warm good afternoon to you. It's Monday, the 19th of October, the start of another trading week on the NSE. It's a short one, however. We only have 4 trading days as the market will remain closed tomorrow on the 20th of October. What do we have panned out for you this week? That's a conversation that you know we will be having and more in-depth, and as far as I will be introducing the guest for the day. Before I introduce the guest of the day, let's take a look at what was happening last week. Looking at a week-on-week basis, turnover was actually up 11 percentage points. We saw more trading activity on the NSE last week compared to the previous week. For this particular week, the NSE investors, especially the foreign investors, were up 50-50 or near a 50-50 split when it came to purchases vis-a-vis sales. They remain slightly net sellers out of some key stocks. We did see some outflows get out of equity, as well as a bit on Safaricom, more so on profit taking. Without further ado, let's look at the key parameters and understand how did the market close on Friday. We start with the index performance. The indices were more or less flat or with some very minimal slight movement downwards. When we look at the NSE All Share, it remained at 139.65. NSE 20 share was down 3 percentage points to close the day at 1,811.13 points, whereas the NSE 25 share index was down 7.64 percentage points to close at 3,212.9. We want to show you the outflows in terms of what was happening with equity turnover. By equity turnover on the NSE, we're looking at all the shares that were traded, multiplying them by their respective prices to get the cumulative turnover for the day. As you know, Mondays and Fridays are the most quiet days. Not too much happens. That was the same case for the NSE last week on Friday, where the market closed at 121,483,920 over that particular day. Now, for this particular week, you can see the spike up there on the 14th of October. That was on Wednesday. 599 million was the turnover traded. This particular day gave a bit of impetus to this week, Monday to Friday, making it 11 percentage points higher than the previous week, Monday to Friday. Some of the key flows that we saw here, a bit of sell-off by the foreigners, especially on equity group. We also saw a bit of sell-off on Safaricom, and it came in at a price of over 30 shillings per share, a bit of profit taking for this particular share. Let's take a look at who the top movers were by equity turnover on the last day of trading last week, being the 16th of October. Safaricom, as always, was the dominant mover, moving 2.4 million shares at a price of 30.1 shillings, culminating to 72.3 million by way of turnover. I&M Holdings, finally a bit of traction there. 501,300 shares traded at an average price of 43.5 shillings per share, which came to a turnover of 21.8 million shares. This is a stock we have been looking at this price, saying that it hasn't followed a similar trajectory compared to other banks in terms of upward price movement. We've always said that our trigger point is to see if any liquidity begins to come through. We have seen this trade go through on Friday. We keep looking at it today and tomorrow and for the subsequent days in this week to see if any movement happens. If so, 43.5 could be an interesting entry point, especially for the long term, but highly determined by the element of liquidity on this stock. Equity Group closed the week at 34.95 shillings per share. 291,000 shares were traded at a total turnover of 10.2 million shillings. KCB Group is now at 37.2 shillings, and we have East African Breweries at 163 shillings at the end of Friday. Who are the top movers by virtue of volume? Of course, Safaricom was up there at 2.4 million. I&M Holdings, 501,300 shares traded. Kenya Power, 415,400 shares traded. Equity Group, 291,000. KCB Group, 125,700. Let's take a look at who the top movers were by virtue of price performance. Bank of Kigali up 5.36 percentage points to 13.75. Liberty Kenya up 5.26 percentage points to 8 shillings per share. Kenyan gained a little bit of momentum, closing up 4.4 percentage points to 5.22 shillings per share. We have been looking at the 5 shilling level, saying on a long-term basis, there is an opportunity to look at this stock. The market has been waiting for the closure of the dividend that had been declared by this company of 25 cents. We also saw a bit of movement there on BOC Kenya and a bit of movement on TPS Eastern Africa. I think for BOC that actually should be written as British America Tobacco, that closed up 3.87 percentage points to 349. Let's take a look at who the top losers were. Top losers, small caps dominated. Home Africa has been oscillating up one day, down the next day. It was down 9 percentage points to trade at 40 cents. Flame Tree was also down 9 percentage points. Housing Finance, Olympia, and Capture Tree. So the small caps are really dominating on price movement. Now, this is where we are at when we are looking at the NSC as a market. We are looking at a market that we have looked at the parameters, and now we are seeing a market where the foreigners continue to sell out of this particular stock. What is happening more specifically? End of quarter, that was the end of September 2020. That was a trigger point for us to tell us that the fourth quarter would be slow because there are no key events happening. However, there is a possibility of a bit more demand for stocks, especially the blue chip companies, largely because of events that have happened at the global market level. We have been saying that NSC is 65 to 70% foreign traded. By virtue of that, the foreign investors follow some key indices just to decide how much funds they will be allocating and more specifically, the exposure to different stock opportunities. Kenya as a stock market is weighted under the MSCI Frontier Index, a key index that the foreigners tend to track to determine the allocation of funds into Kenya. In this particular MSCI Frontier Index, Kuwait is also one of the larger constituents. However, at the end of the month, Kuwait will be moving from the MSCI Frontier Market Index into a larger index known as the MSCI Emerging Market Index. When these index movements happen, you typically expect a bit of reshuffling and a bit of reallocation of funds to certain countries. The movement of Kuwait will certainly mean that there's more room for allocating funds into Kenya as a market. That's a liquidity event that's expected to take root in terms of its impact of fund flows into Kenya from the end of November, trickling through till February 2021. What does this particular movement of Kuwait from one fund to another mean? What does it mean for investor sentiment? And more importantly, are we able to articulate how much money will come into Kenya? And should you be buying, holding, or selling stocks at the current level? To help us unpack this discourse, we will be joined after the break virtually by Mr. Mwathi Kilonzo. Mr. Kilonzo is the Mr. Kilonzo is the head of sales as well as head of equities at EFG Ames Kenya. We take a short break. When we come back, we look at this possible liquidity event and the impact it will have on the Nairobi Securities Exchange. As always, we want to hear your thoughts. Our SMS line is 20146. Alternatively, you could reach out to us at Metropole TV on Twitter, Instagram, or Facebook, or you could also reach out to me directly. That's at Mbithe Mwema on Instagram, Facebook, or Twitter. We look forward to seeing you after the break when we discuss, should you still buy, should you hold, should you sell out of the NSC? See you after the break.